All right. Well, I might just go over what I've written in premium recently. All right. So this was on the 11th of the 10th, which was late last week. Well, we saw a bit of a bounce out of the low at 58.8. I might back it up slightly more. This is the morning of the 11th of the 10th. So this is when we had the dump from 64k essentially. You can see my existing lines that were there. That was when I had drawn them when we were up at 64k. We didn't get the pump up like I thought that we're going to, up to that 65.5k region. But the main gist of it was that we were going to be having some sort of pullback. And that pullback came. So at that point, we had only had this was going to be the second corrective swing to the downside. And if I jump into the chart, we can see what I'm talking about here. So this was the initial pump up to 66.5k. And this is on the daily time frame. It's important to note that the time frame that I'm looking at, which is the daily, this is the first corrective pullback. Then we got the second pump up, and this is when I was putting in those messages last week. This is the second pullback, and now we've come up, and it looks like we're starting the third pullback. Now this pullback here can come down to 61.5k. As long as there's a couple days that are red to the downside, that is then considered a pullback before it moves up. And if it holds this low, that's fantastic. Because then we're going to have a higher low moving up, and that's quite bullish. And it sort of goes with the program that, okay, these lows here are in, and we're starting to move up. It can also break below these points. It's less bullish, but it's still okay, given that it is the third wave down. If we were going to be coming down to these levels on the first wave down, then that does start to cause some concern, because we've still got another couple pullbacks to go. And when the trend's down, which it is locally, the trend is down, it's more likely that your next pullback is going to be a lower low, and so forth. But the fact that we've had these 2 days up have closed above these highs, I tend to believe that these lows here are going to hold. And we could come down to 60k or even 59.5. Just above this low here, but I tend to urge on the side that we're going to see a higher low. But yeah, we'll see what comes from it. It doesn't really matter too much. Ideally, we get a higher low, but if we do get a lower low, it's just a matter of seeing this sort of V-shaped recovery, like what we saw late last week, where we got that nice V-shaped recovery. And so the dates that you see on this chart, these are UTC dates. In Discord, they're my time zone dates, and my time zone's ahead of UTC by, I think it's 10 hours. Could be 11 hours actually at the moment. Who will be able to join us? Welcome, Mystic. Let me know if you can't hear me, mate, or if there's any issues. Yeah, definitely can, Star. Expectation is that we are going to have that third wave down. It's only happened sort of once, maybe twice this cycle, where we've only had two corrective waves before a pump up on the daily time frame. So yeah, the probability is that we're going to have this third wave down. It'll be 2, 3, 4, even 4, up to 4 days down. No. So on the daily time frame, you can have up to, say, between 7 to 11 days in a swing direction. But if we have a look at what these ones have been doing, so we hit the high here, then we got 1, 2, 3, 4, 5, 6. We had 6 days down until we found the low, and then on the way up it got shorter. We had 1, 2, 3, 4 days to the swing, 4 days in the swing to the upside, and then 1, 2, 3 days to the swing to the low side, and now we've had 2 to the upside, and looks like this could be 2 to 3 days to the downside if we keep with this trend. So I think it will resolve itself pretty quickly. I'd say probably by the middle of the week at the latest, given that we've already started a bit of a sell-off into the weekly close. It could be as soon as Monday, Tuesday, that we have this downside sorted out before it starts to move on. So yeah, I don't think it's going to last a long time at all. No worries. Can you hear me all good, Mystic? I just want to make sure that his perms are okay. Yeah, sweet, mate. No worries. So yeah, essentially, I think that this pattern's going to continue. It's just a matter of whether we get that bounce. We might draw some fibs, actually. We'll see what comes up. Yeah, so based on this, if we're any one of these 3 levels here, and it's a pretty tight range, to be honest. We've got the 50% at 61K, golden pocket at 66. It probably goes down to about 64, 60.3. And then the 786 a little bit lower at 59,850. It's a pretty tight range, but there's definitely some confluence in these areas, and probably the golden pocket looks pretty good in the 50% level, if I'm honest, because you also have these closing candle tops at similar levels, and because we have put in a closing candle that is a higher high compared to here, if we were to pop down and get a nice bounce from the golden pocket, it would look pretty nice, I think. The only drawdown to this is that there is a lot of liquidity that has built up down here. So if we were to get a sweep below, come down to here and sort of bounce up, sweeping these lows is going to knock out this liquidity. The longs, which is we want to see the liquidity taken out in a lot of liquidations, because that typically signals a reversal. And if it does start to break below these points, there's going to be a lot of shorts coming into the break, thinking that, okay, we're going lower, we're going to put in a lower low here. So that could also provide a decent spring. That's why I'm not really too concerned whether we get a lower low or a higher low. The bounces from here, that's great. Like I said, because it provides a good structure, a good bullish structure, but also taking out this liquidity is not a bad thing too. But ultimately, I suppose what I'm trying to say is I'm expecting a pullback, and that's a short-term view. But long-term or medium to long-term, I definitely think we're going to be pushing up. And that we're starting to get to the pointy end of the deal now, where we've been correcting for going on 7 months. It's actually probably close to 7 months to the day. So the correction is nearing its end. And yeah, I think the correction is going to end up with Bitcoin breaking to the upside. I might just jump into the Chinese and Hong Kong stocks, because I did talk about them in our last in the last premium catch up, and just want to sort of see on since we last caught up. I did see that there was a lot of media attention about it. Stocks dropping 10%. It's over essentially, and they did drop quite considerably. But when you look at where it's sort of bounced from, at the start of the second week into September, the Hang down at around 17,000 points, and it's still over 10%. How much? We'll measure it. So it's still 25% up from the low in September. Um, so it had this massive run up with no pullbacks realistically, and the longer that you have straight up, as we know in crypto, because crypto is a lot more volatile and consistently volatile, the longer that we have a straight up line, the bigger and more violent the pullback is, and that's exactly what we saw here. A lot more violent pullback. So we should perhaps expect a bit of consolidation, I think, before it starts looking to perhaps continue moving up. I think the stimulus is going to continue over in China and honkers, but it's definitely looking much better over there. And these pullbacks don't really concern me too much. They only got 2 red days in a row. If there was a third red day, this green candle was a red day and it was engulfing, then I'd be concerned. If I was looking to short, then I'd be waiting for a bounce to short, but it only got the 2, so I think that's fine. We can check out the China stocks as well. So China pulled back a little bit more violently, but it also went up quite a bit more too. I want to see how high it's sitting from its September low. So it's still up 25% as well. At their peak, they're up nearly 50% in the space of around 2 to 3 weeks. So for a traditional finance index to be up nearly 50% in 3 weeks is mental. It's really no wonder that they have had such a pullback. But when you have these massive lines up, as I said, these violent pullbacks should be expected, and this is what's happened. But again, for the China stocks, they only had the 2 red days, so I think it's fine, and I think that it's going to maintain its new trajectory, which is moving on up. Jump into the SPX. We had another all-time high close last week, breaking up to the upside. US stocks are looking fantastic. It is starting to get in a bit of a straight line here, but certainly not the same gains as what we saw over in China. But this is probably more so because we're already at all-time highs. There's still liquidity to come into this market, but not as much as what there is over in China and honkers. There's a lot of money parked on the sidelines over in China and Hong Kong. There still is in the US, but we're just going to be breaking out here. So moving forward, what we want to see is on a pullback, these levels here at around 56, 5,700. We want to see these levels here hold on a pullback, and that should start forming the new support. As we can see on these pullbacks over here, we didn't get weekly closes below these levels over here, which formed the support. So it was originally resistance, formed as support. This was the resistance. Now that we've pushed above it, we want to see it hold as support. We can get wicks down, but we want to look at the closing candles, particularly when we're looking at the weekly and monthly charts. So there was that big sell-off, but the closing candle was still back above the tops. So for me, US stocks looking extremely strong. I think this is going to continue for some time yet. The NASDAQ has sort of lagged a little bit this time around. So when we had this run up over here, it was leading. We'll get rid of some of this stuff. It was leading the SPX over here, and in this run up over here as well at the start of the year. And now it's sort of lagging a little bit, and we're seeing the SPX sort of lead the markets. But the NASDAQ can get a lot more, it can move a lot quicker than the SPX. So, yeah, it's thereabouts. It hasn't broken its new all-time highs, but I think it's going to come. We did see a strong bounce in the Dixie, also known as the US dollar. It's been selling off for a number of weeks here. A little bounce in here, but eventually sold off and broke below. Got down to 100, and it broke below this point here. So it really is no surprise that we have seen a bit of a bounce. I think that this is going to be more of a bear rally. I'd be surprised to see it start getting weekly closes above this 103.3 level. For me, I think the trend is going to be generally down. And I think a lot of this bounce is actually a bit data related. You probably don't hear me talk about data and news too often, but I will in this instance. The job data that came out, I think it was last week or the week before, was extremely strong for the US dollar, and the data that came out is probably going to go against the Fed putting in another 50 point rate cut. It may even stop it from putting in a 25 point rate cut, to be honest. But that job data was extremely strong. And then last week we had slightly strong CPI data and PPI data too. So that what sort of maintained that rally moving up. But it's interesting because in conjunction with that, we have had many weeks to the downside. So a bounce was sort of coming. And the 2 weeks leading into the bounce, we're seeing weakness start to come into this downward movement as the closing candle didn't engulf or close below the prior week's wick. So that's a sign of weakness in the downtrend. And it just sort of lined up with then the job data coming out, which gives you that nice big spring. So I think the Dixie takes many weeks for it to play out, but we'll probably start to see a bit of a rounding out up here. We might get some wicks through, but I think the closing candles will be below that line before it starts to sell off again. What other markets can we look at? We can go into Japan. So Japan has had an extremely nice bounce off its lows. You guys in premium will be well aware of this and what happened during this period. But as we can see now, weekly closes are back above the 1990 all-time high. And the last week, we saw it get flipped back into support, which is great to see. Resistance over here, back into support. We had a nice bounce off the level. So it'll be interesting to see how the next few weeks go. If we can start to see the price get above this level at around 41,000, and then flip that into support, which it's laid a nice foundation here. It's been fairly resistant, that level. So getting above there is sort of critical, and then sort of doing what it's done here, where it comes back down, tests the level, and takes off again. Are there any questions, comments, or requests? Can people from all over the world trade in those Asian markets? Yeah, they can, Star. Definitely can. So, and there's different ways of investing in those Asian markets or in any market. You can do it via like ETFs, or there's even ETFs that will mimic the index that you're looking at. So when I'm looking at the China A50, or HSI or SPX, they're all indexes, and there's ETFs that will mimic those indexes. Or there may be ETFs that have targeted a specific specific index that you want to look at, or that they may target a specific genre, for instance, climate change or battery technology. And those companies that are within that ETF could be from Germany, Taiwan, America, Australia. They can be from everywhere, and there's hundreds and hundreds of them, of ETFs running around that you can potentially get into. Or you can pick single stocks and get into them as well. So there's lots of different ways of going about it. In the traditional finance space, it can be a bit more tricky in the sense of when it comes to like trading fees. So some of them will have it might be $15 per trade will be the fee that they charge you. It's a lot harder to be in and out with smaller amounts of capital, like what we would do, or you might do in crypto, to do the same sort of thing in traditional finance. No worries. So I might have a look at Bitcoin dominance. So it's showing a bit more strength again here. We've had some tests to the low side, and it's been bouncing off it. Part of the reason why we did see a bit of a bounce last week, again, it's probably has a little bit to do with the news that we saw, because it was abnormal news. It wasn't just near expectations and a little bit over. It was quite a bit over. And sorry, this is from nearly 2 weeks ago now, and it's in relation to the job data that came out. It was substantially away, or substantially above what the expectation was. And this is something that I have said on a few occasions. If the data that's coming out is thereabouts, it's pretty close to what the expectation is, I don't see any major changes happening in the market. But when it is drastically different to what the expectation is, that's when you start to see abnormal moves. And we saw a big pump up to the upside, and a lot of that has to do with alts require liquidity coming into the space in order for them to start, getting some breathing room and starting to pump up. When you have strong data coming out, that's essentially going to have the reverse effect, because it means that, okay, we don't really need liquidity injected into the economy because the job markets are strong. And this has reacted to that in the inverse way, where, or not inverse, it's acted upon that, because job data coming strong. So the assumption then is that not as much liquidity needs to come into the market. Therefore, alts are going to have to wait a bit longer before they're going to get their pump up. So alts sell off into Bitcoin, because Bitcoin's the less risky asset in the crypto space. Hence, we see the dominance pushing up, but it hasn't broken up to new highs. So this could still be a bit of a rounding out here. We definitely can still see higher. I mean, that's been the trend for best part of two and a bit years now. We come back here. September 22 was what marked the low for Bitcoin dominance. So yeah, we're over 2 years into this uptrend. So until the trend breaks, you got to assume it's moving up. But 2 years in one direction is a long time. This flipping and moving down is going to happen at some point. It's just a matter of when. And I think we're closer to the tail end of this move than what we are this continuing up. And we could even see it sort of get to 60%, to be honest. It's definitely not off the cards. It's only 2% away from where we are right now. But I can't imagine it going too much higher than that. Do we have any requests? Morning, Hunter. Good to see you. I didn't see you pop in there, unless you just came just now. Perhaps we'll take a... All right, yeah, we can have a look at Ethereum. So I'll start with Ethereum BTC. It's been looking quite bearish. Broke down. This is on the monthly chart. This candle back here in the August candle broke below the trading range, and then we saw the selling off continue into the following month. However, a bit similar to when we were looking at the Dixie, this candle here closed within the wick. It wasn't engulfing the wick, so it's showing that there's a bit of weakness in the downtrend and in the selling. And this month is looking like it's going to be something similar. It actually failed to break below the September low so far. It still can, but provided that it holds the September low and the body of the candle doesn't engulf it, we could start to see a bit of a rounding out and a bit of a bounce, which would be great for alts, I think. So I think whilst the trend is down, and this is sort of inverse to the Bitcoin dominance as well. It's been down for, when did it make its high? So it's just September. It's been running down, well, even before that, really. But we'll just go with this point here. It's been in a downtrend since September 22, so 2 years down. And we could finally be starting to see a bit of a rounding out down here, I think. So for Ethereum, there is a lot more. It is, I suppose, a bit risky because the trend is down, but we're not into waiting for the trend to turn up and start breaking these tops over here, because then you're going to lose all your gains. I think we're definitely going to be finding a bottom here if it hasn't already been found. And we're sitting right on some support as well. So if you see the perforated red line here, that's the current price. It's starting to get into these old tops. So we should expect some support to come in down at these levels. I think Ethereum is looking dead if you look only at this region here. But once you start analyzing these candles and what they're doing, it is starting to look okay, I think, anyway. Look, I think there's a lot. You get a lot more value looking at the BTC charts than what you do looking at the USD charts. So this is looking a bit more stronger on the USD chart than what it is on the BTC chart. But I think with the BTC chart, it's Bitcoin's the anchor, if you will, and so you want to make sure your ship is getting close to the anchor or doing better than the anchor. And if it's not, and it's a long way off, you want to make sure that it's not going to be drifting further away from the anchor, essentially. And on a USD chart, you can't really get that feeling of how it's going against Bitcoin. So I think the USD chart is great for once you've decided that you want to enter into a token to then make that entry. But for analyzing how a token is performing, for me, I find against Bitcoin, against Bitcoin on the Bitcoin chart is the best way of doing that. I might have a look at NIA, see what NIA's been up to. So it has had a bit of a sell-off on the Bitcoin chart, that is. So it's still thereabouts. We're still holding this level of support, which is good. We don't want to see it sort of break below. It can break below, because then we have these lows over here. these three lows, they're the key levels that we want to see. 1, 2, 3. They're the levels to the downside that we want to see broken. Obviously, the lower you go, the more important it is, because this is a pivotal level over here. Go out to a weekly chart. Yeah, so on the weekly chart, you could probably forget about this low here. You got this one and this one here. They're the important levels that we want to watch on the weekly chart. It is looking bullish on the weekly chart. We're getting close, higher high. This here is your lower high. So we're getting a change of trend in this area. We just want to make sure that we don't start falling back below these levels. Ideally, we have these tops on the daily act as support before we get our next bounce. So I think NIA is looking good overall, even though we have had a bit of a sell-off. As long as we're above these sort of levels, I'm still happy with how it's performing. Might jump into sweat as well while we're here. You guys are vested in sweat too. So sweat is in a bit of sideways action at the moment. We're not seeing, it's not giving away too much, keeping its cards close to its chest. So I'll leave those lines on there because they're still quite important. So we want to see it get above the horizontal still. It's still really no change to when I'd posted this chart up last time. I posted it or we talked about it in the VC. I can't really recall. Sitting in this zone is a bit of no man's land. We either want to see it come down and bounce off these lows, not get below it, or get above here and take off again. Given it has had a bit of a bounce, the important level actually moves up a little bit. You don't want to see it really break below 1,000 Satoshis, because we have had a little bit of a bounce up. So if we do fall down below, that's going to be another lower low in comparison to this. We want to maintain a bit of a higher low here before it starts moving up. I might just jump into the total crypto market cap. So we've got our little parallel channel here, which has been running nicely. You can see it's bouncing off the middle of the channel. I'm really keen and interested to see what it does when it can get to the top of the channel. There's probably a couple ways that it can play out. We can either see a rejection, flat out rejection, a fake out, and a fallback below. I might just delete that one so we can see the next one. Or pops right out, can come back down and test it, and then take off. I think that might be what we're more likely to see, something like that. But nonetheless, I'm very keen to see how it does react to this channel when it does eventually get up to challenging it. And the thing is, when you do see these big pushes out, it might be even higher. Go up to 2.6 trillion or something, and then it has a sell off of 15% or so, and you get a lot of people selling in these pullbacks. Once it gets over that sort of 8-10%, people start to get a bit trigger happy, but all it's doing is likely coming back down to test the top side of the channel that it's been stuck in for such a long time and move up and end up going higher. So we'll see how that all plays out. Still low. Yeah, they definitely are still low, Hunter. It could. This definitely could still be. It could be distribution. There's no doubt about it. It is an option, and it should be highly considered that it's distribution as opposed to accumulation. For me, I think after going through the prior cycle bear market, it doesn't feel like a bear market to me. I'll pull up a chart and we can have a little bit of a look. So in the last bear market, we got some massive selling going on, and it was virtually one-way traffic. And then, we had a big candle here from 57 down to 41 and a half. And throughout this period, the sort of stuff that you were hearing about they were quite massive. Lots of fraud, massive firms or hedge funds, if you will. So there was like Three Arrows Capital. I can't remember the exact number, but they went belly up with about $10 billion because they were going 10x long at the highs. There was exchanges going under. There's a lot of serious bad news coming out during these periods, and the leverage unwind. I'm not really seeing that sort of stuff happen at the moment. And when you got these sell-offs, like that's a multi-week sell-off right there, and then you got this bear rally, and it looks like a typical bear flag as well. You get your points to the downside, points to the upside, failed to break the prior high, and then it ensued again. And we're not really seeing that at the moment. If anything, it's sort of in reverse. It's more of a bull flag this period here, and now we're starting to get that sort of breakout, or at least it seems that we could be starting to get that bit of a breakout now. So volumes are definitely down. Don't get me wrong, but I think it might have a little bit to do with there's a lot of people have sort of left the space. They've gotten bored. We saw months down, and the Google searches are down on Bitcoin. They're right down. So I think a lot of retail have actually left at the moment, and that's sort of when you do see the moves come in, because you'll see retail start coming back in once Bitcoin breaks its all-time high, and they think it's going to moon again, and you get those massive bouts of volume at the tops. So having low volume is a bit of a concern, but I'm not completely concerned about it. I think it will come back in. We definitely need it to come back in to break out of the highs. We definitely need that volume to come back in to make it sustained. Otherwise, if we don't have the volume come back in, it could also just be a fake out. We might wick to 80k and then fall back below 74. And if that was to happen, I'd be in two minds as to whether it's all over. That might be all that we get. So yeah, definitely important to watch the volumes, but just how the charts are playing out, it doesn't feel bearish and doesn't appear to be bearish based on what I've experienced previously. Yeah, I suppose that's sort of what I'm trying to say as well. Any push to the upside, if it's on low volume, it's just going to be retraced without a doubt. It needs that volume coming in, but that volume can come in up at around 70k. That's fine. It's just got to come in before we start breaking that 74, I think. Yeah, we can take a look at Solana or BTC. So really no change from last week here, Starseed. It's just been sort of moving sideways, holding its lows. Want to see it get above these tops over here, around 2400. 24,000 satoshis. Break above there, we start moving to the downside. You could watch these lows, but I'd probably like to play it a bit safer and say, look, we don't want to see it get below 21,000 satoshis back over there. And even, I'd probably leave it at that 21,000 satoshis. You got the prior completed swing over here at 19,700 satoshis. That'd be the ultimate level that you want to see held, because this overarching swing may not be completed just yet. But if it was to get down here, then we're starting to break the channel. I want to see the channel held as well. But I think Solana's still looking okay. It's just sort of doing its own little thing at the moment, not breaking up, not breaking down. Look at the USD chart. So we're seeing much of the same here on the USD chart as well. It's been doing a bit of sideways, not really giving us a whole lot. Does look like there's a little bit of triangle pattern going on, but we'll see how that goes. And by that, there could be a bit of a triangle going on there, which can be bullish, can be bearish. It just depends which way it breaks to. That it breaks to the downside, but that can be a fake out and it takes off again, or vice versa. Or, you can get a break to the upside, a retest, and a takeoff. Triangles can be pretty difficult to play. Something that I've sort of learned is the longer that it stays in the triangle, if it gets right to the end, they typically just tip out. But, I really don't play them too much. I don't mind wedges, playing with wedges. But, I think Solana is looking okay. It's neither bullish nor bearish at the moment. Certainly no change to last week. Oh, no worries. Oh, all right, guys. I think that'll probably do us for today. Next week I'll want to go over the cycle length and timing, and just something that I'm sort of working on for the next sort of 2 years now for Bitcoin, and what I think has a possibility of happening. It is perhaps a little bit of left field, but we're going to be open to all ideas and what could potentially happen. That's good to hear, Starseed. I enjoy it when I assist people with bettering their knowledge and things like that. So, but I hope you guys all have a great night and all day wherever you might be, and should have an announcement shortly regarding someone taking up a position at Dart. I think it will be great for all of us. So stay tuned for that too.